Hey everyone, welcome back to VMGA TV. Today we're going to be discussing an important topic for anyone looking to invest in a high inflation environment. Inflation can be a real threat to your investments, but there are ways to minimize the risk and make the most of your money. So, let's get started. First things first, let's define what inflation is. Inflation is the rate at which the general level of prices for goods and services is rising, and, subsequently, the purchasing power of currency is falling. High inflation can occur when there is an increase in demand for goods and services, a decrease in supply of goods and services, or a decrease in the value of the currency. High inflation can have a significant impact on your investments. As the value of currency decreases, the purchasing power of your investments decreases as well. This can lead to a decrease in the value of stocks and bonds, and make it more expensive to purchase goods and services. So, what can you do to protect your investments during high inflation? Here are a few strategies to consider. Invest in hard assets. One strategy for protecting your investments during high inflation is to invest in hard assets. Hard assets are physical assets like real estate, precious metals, and commodities that have intrinsic value. These assets can help protect against inflation because their value is less tied to the value of currency. When the value of currency decreases, the value of hard assets may increase. Invest in high-yield bonds. Another strategy for investing during high inflation is to invest in high-yield bonds. High-yield bonds are bonds that have a higher interest rate than investment-grade bonds. These bonds may provide a higher return on investment during times of high inflation. Invest in stocks of inflation-resistant companies. A third strategy for investing during high inflation is to invest in stocks of companies that are resistant to inflation. These companies may include those that produce essential goods and services, have pricing power, or have a strong brand. These companies may be better able to pass on the increased costs of inflation to consumers, which can help protect the value of their stock. Diversify your portfolio. Finally, it's always a good idea to diversify your portfolio. Diversification means investing in a variety of different assets, such as stocks, bonds, and hard assets, to spread out your risk. Diversification can help protect your investments during times of high inflation, as not all assets will be affected in the same way. So there you have it, a few strategies for investing during high inflation. While inflation can be a real threat to your investments, it's important to remember that there are ways to minimize the risk and make the most of your money. By investing in hard assets, high-yield bonds, stocks of inflation-resistant companies, and diversifying your portfolio, you can help protect your investments and maintain your purchasing power. Thanks for watching, and we'll see you in the next video.